stereotypes, breaking the rules. You can't tell me what is for me. Yeah. You got a lot more behind those pretty eyes, but you gotta let the world see. Yeah. So shake it out. Now is the time while you're waiting. You're good enough. Now is the time while you're waiting. What are you waiting on? Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Don't let them bring you down. If they ain't rocking with you, so what? Yeah, you're gonna be cool without them. Oh, don't let them bring you down. Don't let them bring you down. Oh.
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. My name is Van Richards, and this is the NASDAQ Stock Update for September the 3rd, 2020. Thank you for joining us today. We have a lot of really good information that we're going to get into today. The two stocks that we're going to cover today are going to be EA, Electronic Arts, and we're also going to cover eBay. What we're going to do is we're going to go over three things with these different companies. One is we're going to talk about the earnings growth, the industry strength, and then the stability of these different companies. So let's get right into it and see what's going on today with eBay and EA. Okay. These are the two that we're going to be looking at, so we'll go ahead and begin right up here with it. A lot of you are already familiar with EA. You've seen Star Wars Battlefront, you've seen Madden Sports, you've seen FIFA. It's a really popular electronic game. It was down on the day. Everything was down on today. It was a really, really ugly day on the market. But you know what? I think that it was due from the standpoint that the market's been advancing so much recently. When you see companies like Tesla that was down over 12% today, and you saw Apple that was down almost 10%, it's kind of like it's letting off a little bit of steam because it's been advancing so quickly from that standpoint. If you're out there and you're trying to gain the market on a day-by-day basis, you have a better possibility of losing than you do if you're putting money into this thing for a very long time. I want to get into your questions today just a little bit. So if you have questions, enter them into the platform that you're listening to me on, and I'll be glad to take time to answer them. Generally, it's going to be at the end, and if we run out of time, then I'll bring it up tomorrow. What I want to do is I want to start with one question that I received yesterday that came in that I think that it's a very opportune time to answer this before we go into talking about the two stocks that we're going to talk about today. The question came from a retired individual. He said, I'm retired, and I want to know if I should be taking the profits off the table for the stocks that I own right now because I'm retired. My answer to you is it depends on when you're going to be using that money. Generally speaking, my answer is going to be yes, absolutely. You should go ahead and take some of those profits, even if we saw a decline today. If you own Tesla for a long time and it went down over 12% today, and you're thinking, I'm going to use this money for income for the next year or 5 years, absolutely take it off the table today, because you don't know what tomorrow is going to bring. If you're trying to game the system, it's a probability that you're going to lose. This is the way that you want to look at investing if you are retired. There are only three reasons that people who are retired or coming close to retirement will invest. Number one is they look at it for growth. And the way that you should look at growth is you need to put it into buckets. I've got a video on my YouTube site that is on the bucketing system. And the general idea is that you're segmenting your money into certain time periods. So let's say, for example, you've got a 1 to 5 or a 1 to 10 year bucket. Then you've got a 10 to 20 year bucket. Then you've got a 20 to 30 year bucket. Because if you're in your 60s and you're retiring today, you need to plan on having a very long and comfortable retirement. So if you're putting away money, and the money that you're talking about for the gentleman that sent in the question, if this money is for the next 1 to 5 years, maybe even the next 1 to 10 years, absolutely sell it. Get out of it, because there's too much risk in there from that standpoint of the market going down and you losing it. Now, I know that there's a lot of people out there that are saying, oh, no, don't do that, because you're going to miss out on all the possible gains that might be in there. This is the way that the markets have worked forever. Yes, I know that Dave Portnoy's out there saying the market always goes up, but the market doesn't always go up. The idea is that the market works in cycles. There's generally 2 cycles, a bull market and a bear market. You've heard of it forever. Most bull markets are going to last about a year to 18 months. The one that we just went through, the bear market, that is, the bear market that we just went through was only really about 3 months. So that was an anomaly. Most bull markets last for about 4 years. If you can last through that cycle, then yeah, hang on to the stocks that you've got. But if you're looking at this for what am I going to be doing next year with this stock value, I need to use it to pay for whatever it would be, then you don't need to be investing it from that standpoint. Okay. So let's get into the stocks that we're talking about today. I'll talk about the other 2 reasons for investing for retirees in just a few minutes, but I don't want to lose some of you who came to listen to me talk about the different stocks in itself. So let's take a look first off at electronic arts. So let's keep working on and see where we are from that standpoint. This is what the stock looked like over the past year. Now, I want to make this just a little bit bigger, because what we're trying to do is we're trying to look at the momentum of the earnings. That's one of the hallmarks of a good stock, to hold on to it for a long period of time. Because remember, why are you here? You're here to learn to be an investor, not a speculator. So let me make this just a little bit bigger for you so that you can see exactly what I am talking about. Okay. So as we look at this, this is what happened in EA over the past year. And everybody knows the big dip was the coronavirus market crash in between February and March. Now let's look at what was in the very beginning. A year ago, on September the 3rd in 2019, the value of EA was at $92.56 a share. Today, it closed up $132.82 per share, or not up that much, but that's the price that it was at the close. So the total gain in that time period, even though that it fell some today, the total gain for the last 12 months, including today's losses, was 43.5%. So think about it for a minute. If you were that retired guy that wrote into me and said, what should I do with it? And I had EA, or he had EA, I'd say sell it, because you're still up 43.5%. So keep that in mind. If you're looking for shorter term uses of money, it doesn't need to be invested in the market. It needs to be invested in something that's going to be stable, because you don't know what's going to happen. Okay. So let's say that we're trying to look for stocks that we want to invest in for the long term. We're looking for that, filling that bucket that might be 20 to 30 years out there from that standpoint. Look for the momentum of earnings. Look at what happened in the first quarter after September 3rd last year. So that would actually have been the second quarter earnings reports. It was up about 12%. If we look at it a little bit further, we go into Q3, which was reported on January 30th. Then it would be up 11%. And then we go into the next quarter. The momentum was gathering. This is one of those stocks that's really gained in value because more people are utilizing it because of the stay-at-home phenomena that's happening right now. So then when we look at the last quarter that's reported, wow, this was what really made the stock jump ahead, because we saw the earnings over expectation by 81.36%. So that was a big jump. The next thing that you want to do when you're looking at a stock, if you want to see if you want to hold on to it, is, you want to make sure that you've got a momentum of earnings, that you've got consecutive earnings that are continuing to grow, because if you don't, then there's possibilities that the stock's not going to continue to grow in value as much. How is that particular stock keeping up with its peers? Its peers EA competes with Sony, Microsoft, Nintendo, Activision, Blizzard. I know there's some other ones out there, but these are the big ones. It's not hard to look at the graph that you see and see most of them going in about the same direction. So I think it would be safe to say that EA is keeping up with Sony, Microsoft, Nintendo, and Activision, Blizzard. So the one thing, though, that you do have to look at, I think, that really helps you to understand the momentum here is the news that comes out about this stock. The big news is this. Madden NFL Sports 21 sees some of the strongest gains in this stock, or perpetuates some of the strongest gains in this stock that there's been. It's 20% year over year just because of that one particular game. Now, I know there's some people out there that might not like it, but that's kind of like the difference between, I think, liking vanilla and strawberry and chocolate and ice cream. It just depends what you like. But one of the big benefits, we're going to talk about momentum here in just a second, and stability in the market, is that there is a huge fan base out there of people that love Madden NFL. Now, when we get to the next part, we're talking about the moat. And if you've never joined me before, this is what a moat is. Keep this in mind when we're talking about sustained profitability. The moat of a company is how well the company is able to stave off its competitors. Yes, Sony and Microsoft and Nintendo and Activision Blizzard are all out there gaming for the same market that EA is. But here's a couple of things. Here's one thing that's going well in EA's benefit. They have a fanatical fan base. It's very favorable. Now, from the standpoint of a moat, there's going to be the narrow moat, which is, they have some ability to stave off competitiveness. A wide moat would be there's a lot of ability to stave off competitiveness. And I think that the ability to stave off competitiveness for EA is thwarted just a little bit, maybe not a little bit, but an awful lot, because of the Chinese bans that's going on right now. If you look at what's going on, not only is the fact that there are some Chinese game makers that have some involvement with EA that's going to have bearing on its value in the future, but the Chinese market is a huge market for EA. So if the Chinese aren't allowing this particular game as much, it could possibly affect the profitability of it going forward from that standpoint. But I'd say right now, the faithful fan base has a very positive effect on the company in itself. So let's look actually at the valuation. The current value today closed at $132.82 per share. Now, what Morningstar, which is a rating service, Morningstar Research, they say that the fair market value of this stock is really $118. So the thing is that it's selling really at a 12.56% premium. That's mean it's selling over whatever its fair market value is. Now, when you look at their modeling system of stars, they're going to give this particular stock a 2-star rating. The reason is, if you have a lower value, which it could be in the next few days, who knows, if you have a lower value, you have higher stars because you have more potential. But they're just saying that this is a 2-star stock. Now, let's look actually, though, at what other analysts are saying about this particular stock. There's really only about 21 analysts that are in this particular survey. But when all of them are polled, there are 12 of them that are saying that it's a strong buy. There's one of them that says that it's a moderate buy. And then there's 8 of them that are saying that it is just a hold. So really, what's that come out to be? It comes out. What they're saying is it's a moderate buy, generally speaking. But I want you to remember, though, what I'm telling you today is just for your educational purposes. I'm not telling you to go out and buy this particular stock. My point of doing this broadcast is to help you understand that this is how you can diversify your portfolio through a wide variety of different stocks. And this is just one of them. We cover the NASDAQ 100 here. That's going to be the 100 largest stocks that are in the NASDAQ. The NASDAQ is going to be the electronic exchange system where stocks that are over the counter generally are traded. There's about 3,500 stocks in total. And when we look at the top 100, those are the ones that we cover in this broadcast. So the idea is look for diversification. Don't just go out there and say, hey, I heard that Van Richards said that I should go out and buy this stock. I didn't tell you that. I told you that the analyst said that it was a moderate buy. So let's move on down the road. We also talk about dividends in this show because I think dividends, if you're retired, are a big deal. But the thing is, there's no dividends on this stock. So we're just going to keep moving on. The next one we're going to get into is going to be eBay. Yeah, eBay got hit today too, along with everything else that was in the market. It was down 3.49%. But a lot of you are familiar with eBay. It's a global online commerce marketer. Basically, you can market your stuff through eBay. They've got competitors, but they have a competitive edge that's going on too. Let's look at that momentum of earnings and see what's been going on. A year ago, this particular stock started on September the 3rd, 2019. Remember way back then, way back pre-coronavirus? Geez, we thought we had troubles then. But today we see that we look back and see that on September the 3rd, 2019, it was at 39.45. And today it closed at 53.16. Now, still, even though the fact that it went down over 3%, we see that it is up 34.75%. And then you can see the earnings that's been populated here on the screen in front of me. And this is the idea. We're trying to see when we're analyzing a stock to see if there's more potential going forward, even though that the market may be high. We're trying to get an idea is there potential for this thing moving on? And every single quarter over the past 12 months, it has progressed. If we look at the first quarter that was after September the 3rd, last year, they beat their estimates by 12.7%. Then we went to the next quarter, it was up 11.5%. The next quarter, it really wowed the analyst, and it was up 49.32% in earnings. And then, hey, look at that last quarter, up 81.36%. I'd say that this stock meets the criteria for one that's continuing to have momentum forward. Now, should you buy it? I don't know. Depends on how long that you're thinking that you're going to hold it. If you're going to try to game the system and make a profit in a day, then I don't think this is going to be the one for you. But if you're looking at this and you're thinking, okay, this is going to be for my retirement bucket that's going to be 20 years from now, yeah, this would probably be a pretty good stock. It's not going to be guaranteed. Obviously, none of the stuff that we talk about here is guaranteed. None of it. That's a different show that I do. But the point is that the past performance of these investments, as you'll see throughout, is not a guarantee of its future results. We try to get an idea of what might happen, and we try to theoretically strategize so that we can make money. But in the end, there's no guarantees. Okay. How is eBay performing against its competitors? Because we've seen that the momentum of the earnings is doing really well. How are they doing against their competitors? Well, who are their competitors? That's a good question to ask. You know them, and so do I. Amazon and Google are the biggest competitors with eBay. They have a different platform, but they still have the same thing. People can sell their goods through Amazon. People can sell their goods through Google. But you're going to see that it's a different platform, and that works to an advantage with eBay. Now, Amazon, as you follow the dancing cursor, Amazon has moved ahead of everything because of the diversification of their delivery system. They're basically bringing everything to you from, cotton balls to beer. It's a wide variety of things that they sell on their platform. They come to my house a lot. And as I mentioned before, the past performance of these investments is not going to be a guarantee of its future results. But just look at the little bit of news that came out on this stock. Okay, the Motley Fool reported that the earnings of the last quarter were actually up 26%. So that goes back to the criteria that we were looking for in a stock to buy, and it's one that has continued growth in earnings. If you're thinking that this is a stock that will continue to grow, the probability is that it will. Of course, there's no guarantees of what's going to happen, but the probability is based on the fact that if it's had consistent earnings in the past that there's not much reason to think that those earnings are going to go down the tube from that standpoint. Although I'm going to state it again, there's no guarantees. Okay, what about the moat? Remember what the moat is? Remember, the moat's going to be the wall that stands between eBay and its competitors, and it's narrow from that standpoint. Yes, they have 25 million active sellers, and they are very active on eBay. Amazon's got the same thing, but in a different platform, because you see, this is a first-party platform that's different than the one that's available over on Amazon. Another benefit right now is that eBay has a lower user fee. It's around 9%, where Amazon's is averaging around 15%. So it's less to use. Now, there's nothing that says that Amazon can't try to change the system and lower their fees to compete. There's no reason to think that they're going to do that right now, because they're making money hand over fist. So I'd say that it's probably going to stick to where it is right now. Amazon also has a different third-party platform. The one for reselling individual goods is much easier for, the average Joe out there to use through eBay than it is to use on Amazon. So that is a benefit that is out there for eBay. Okay, let's look at what Morningstar says about eBay. Today, obviously, as I mentioned, it closed at 53.16. Morningstar is saying that the fair value of this is $52. That means that it's only got a premium trading of 2.23%. It's very narrow. Remember when we talked just a moment ago about EA, it was a 2-star company. This, on the other hand, is a 3-star company, because the value's trading closer. The current trading value is closer to what they're projecting that its trading value, its fair trading value, is going to be. Now, let's look for a moment and see what the different analysts say about eBay. Out of 24 analysts that were polled, 11 of them thought that it was going to be a strong buy, and 13 of them, a majority of them, actually thought that it was going to be a moderate buy. Now, on the other hand, I think that still weighs very much in the favor of eBay. And when we look at what the average suggestion is going to be, it's going to be this. We're going to see that it's going to come out to a moderate buy. It's not a strong buy, it's a moderate buy. Now, I want to remind you too that I'm not telling you to go out and buy this particular stock, because it's so important that you fit whatever investments you have into your personal life. Don't try to game the system. This is a show about investors, not about speculators. So if you're looking for strategies to save for retirement, I'm going to go back and I'm going to remind you just a minute about what we do. Of course, again, this one pays no dividends, so we're not going to go into that just a little bit from that standpoint. But I want to go back and just remind you exactly what we do to use these investments for retirement. There's 3 ways to use stocks for retirement. One's going to be growth, 2's going to be income, and 3 is going to be, there are people out there that just like the concept of trading stocks. It's okay. If you're looking at it as a core component of gathering money for your future, then you're going to concentrate on those first 2. You need to have a systematic method that you're utilizing to withdraw money. And generally speaking, there's going to be 3 different methods that I suggest. One's going to be called the flooring method. The other is going to be the systematic withdrawal method. And the third is going to be the bucketing system. And all that information is over on my YouTube channel. And if you can't find it by going to YouTube, go to my website, which is at richardsfinancialplanning.com, all the way down at the bottom, and you can click on the YouTube link and it'll take you to my channel and you can look up all that information that I just mentioned to you. If you want to talk to me more about your particular situation, about how the strategies that I utilize might be able to help you in retirement or in general investing, then go to the page that looks just like this that you see in front of you. And all you got to do is go down to the button, the teal color button that says schedule a call to learn more. You click on there and that links you directly to my calendar, and then you can sign up for a time that you and I will have a telephone conversation about your situation. It's absolutely free. I'm glad to have a conversation with you and talk to you and answer your questions with no obligations whatsoever. So with all that said, I want to say thank you very much. And if you have questions, if you're listening to this on a replay, enter your questions in because I can help you by answering those questions tomorrow, or I'll email you back directly or send you a message on the platform. Stay tuned for a disclosure information that's very important, and I'll see you tomorrow.